another way to think about optimism is like human ingenuity. Humans are smart. Like as a collective species, like we're gonna figure it out. If there's a will to like build a blockchain-based economy and network and a metaverse, like people are gonna figure it out. And that's, I think, one of the biggest, I'd say, lessons is don't doubt human ingenuity.
Hello and welcome to Lewis and Kyle Show, an interview podcast where my friend Lewis and I interview fascinating people doing interesting things like writing books, starting businesses, doing things in the cryptocurrency space, real estate, internet entrepreneurship, growing audiences online, and leveraging the internet to make the world a better place.
This episode is with Matt Slater, who's a VC and angel investor at his firm called Stateless Ventures. Matt has a pretty interesting background in the crypto landscape, being extremely early to Bitcoin and extremely early to Ethereum, as in pre-sale early to Ethereum, which is pretty fascinating to discuss. Before his VC company, Stateless, now, he had a startup that he started and sold to Wire. It was called Hedgy. It was one of the very first smart contract use cases of Bitcoin, also one of the very first products using Bitcoin to create Bitcoin derivative products. If those are all confusing to you, Kyle does a really good job of making him clarify all of those terms in this podcast so they are less confusing. We also discuss, starting those things, his investment philosophy, some of the things he finds exciting in the future of Web3. We discuss his experiences digital nomading, some of the other non-Web3 organizations he's a part of, like the Summit series, and a whole lot more. I'm excited for you to check out this episode with Matt. I'm going to switch over to it now. Enjoy. Matt, welcome to the Lewis and Kyle Show. Thank you so much for joining us today.
Hey, it's great to be here. Thanks.
Absolutely. I want to start out, people listening to the podcast haven't had the luxury of doing the research that we've done. So would you mind introducing yourself, maybe giving kind of like an abbreviated life story from maybe you starting college to where you are today?
Yeah, definitely. So let's see. Going back, I grew up in Vancouver, Canada, which, at 18, I made the bold decision to go to school in America. Studied at USC, I studied finance. And there's kind of where I got my initial, foray into my entrepreneurial journey. In school, I ended up starting my first business, which is called Campus Inc., which is a screen printing company. We did a lot of the screen printing for fraternities, sororities, college groups. And that was a moment where I was like, really, my eyes were open. At the time, I read a really great book called The 4-Hour Workweek. That kind of showed me like you don't have to just do a 9-to-5 job. There's other ways to make money. And I remember getting the first check handed to me for like $1,500 because we were selling. We were just getting started, and I remember being, I can't believe someone paid me to make, to basically print them T-shirts and whatnot. But fast forward, after college, ended up moving to San Francisco, where I kind of got into the crypto world. I was doing a grad program in finance at the time and discovered Bitcoin initially from Twitter, people like Marc and Chris Dixon, and whatnot, and started going to the meetups on the weekends. So it would be like 20 people in a shitty co-working space in the Mission. This was in 2013. So started going down the rabbit hole there, ended up investing in the Ethereum crowd sale, started trading it, and then, was looking at the time, there were no margin products. There were no like crypto derivatives. This is 2013, 14. And so, started putting together some ideas of building a crypto margin trading platform. Ended up getting second place at Boost VC Hackathon. We built a kind of an MVP in a weekend. And then from there, met some co-founders and went through Boost VC to build what became Hedgy, which is my last crypto startup. We were one of the first, I'd say, DEXs in the crypto space, which is a decentralized exchange. This was like even before Ethereum had launched. Built that, raised money from Tim Draper, Marc, Benioff, and a few other investors, and ended up getting acquired by Wire, which is another crypto company, in 2018. And then through that process was continuing to invest, and ended up launching my fund Stateless Ventures in 2017, 2018. And that's where I'm continuing to do today. So mostly investing in DeFi, Web3, Metaverse, now expanding to NFT infrastructure. Yeah.
Yeah, I'm sure we'll get into all of that. I want to ask about crypto in 2013, and like I feel like now on Twitter people are talking about how, you know, it's sort of like a big group of people knows a secret that the world doesn't know yet, and like crypto is this wave that's coming and you can't stop it, but the people that are behind the wave that know it's coming, like they have this huge advantage. In 2013, what was the certainty like around crypto in the future? Like, did it feel the same way, or with the adoption that's happened over the last few years, has that certainty really set in, and only now is it, you know, being behind that wave? What was it like then?
So first, that's a great question. I remember distinctly like getting into starting to go to the meetups and thinking like, oh shit, I missed it. Like I felt this is 2013, so Bitcoin was probably at like when I first got $120 or so. Coinbase had launched; they just raised their C or Series A. Mt. Gox was a big exchange. Bitstamp was live, and I felt like I missed it. And actually, I read a post or a podcast from Marc Andreessen at the time, who was he said he got to Silicon Valley in 1993 or 91, whenever it was, and he's like, you know, Yahoo was live. These other browsers were live. Microsoft was live. Like he felt like he missed it, and he's like, you just don't realize how early you are. So in 2013, I mean, we all kind of had this weird feeling that like, oh, a lot of the smartest people in Silicon Valley are interested in this. They're working on it. You know, this Bitcoin thing is really cool. Like you have your moment, I think, when you first send a transaction and it goes to another address and you're like, oh shit, like that money was just moved. Like I didn't have to talk to anyone, didn't have to go through a bank. But certainly we you know, we had an idea, but no one really could have predicted, you know, where it is now. Certainly Ethereum at the time, because remember this was before Ethereum had been drafted at all. So yeah, it was definitely basically the most interesting sign for me was the smartest people I could meet in Silicon Valley were working on this. So that was just like, okay, pay attention. This is interesting.
Is that same framework kind of guiding you towards that shift to Metaverse, NFTs, Web3, DeFi?
Yeah, I'd say, you know, now I've been thinking about this recently. I think crypto and Web3 is kind of like the next computing wave. You know, first you had personal computers or mainframes in your personal computers. Then you had the internet, which connected all the computers. And then you had mobile, which is probably like the last big wave, which is 2012 or so. And now I think we're having like a new wave, which is, you know, networked blockchain computers. In terms of how I'm thinking of it, you know, there's a bunch of themes I'm investing in. So one, obviously DeFi was a big focus for us. And basically anything that's digital, for example, money's digital instinctively, like there's nothing analog about it. So it was a great first use case for a blockchain because blockchains don't need to talk to the real world for money. It's already digital. They just look at a price feed. They can settle financial transactions. Currencies already are digital, you know, equity is already digital. So that was a good first use case. And now as we go beyond that, like what other, you know, easier low hanging fruit is there? Well, social networks are an interesting one. Like we have Web 2, you know, decentralizing the social networks interesting. And then as you get into other things that are starting to touch like analog world, let's say like real estate, that's a little bit harder because blockchains need, you know, they can't read outside data. So somebody, you know, an Oracle has to provide that outside data. But at least what's driving me is anything that is uniquely enabled by a blockchain is interesting to me.
Well, we had it on the agenda to get into blockchain real estate, so we might as well go take care of that right now. That's what
I've got a question first that I want to ask
about
Hedgy and just seeing crypto derivatives that early. Like, you know, I'm in a class, so I don't want to talk about college too much, but like I'm learning about the basics of derivatives, right? And it's like the class starts out with, well, you can't trade cows for chickens, like it doesn't work, and then it builds on, you know. It's sort of like, I don't want to call it a false premise, but at least a premise that I don't fully ascribe to, up to the point where you're like, okay, well, you have to be able to hedge, right? You have to be able to fix a price. You want to fix the price of McDonald's hamburger. And so like that's why derivatives exist, and here's how you do it based on this underlying asset of like, live cows or whatever, live cattle. And I really just don't understand crypto derivatives as I just don't understand the basics behind it. And so can you talk about like what it is? I mean, I understand what a derivative is in terms of like you're betting on the future value, right? Or you can short it, you can we call like puts, calls. I get it sort of.
Sure.
But could you just describe it and explain
Yeah.
it?
So derivatives is kind of a catch-all word for synthetic financial instruments, which is another way of saying like bets, financial bets. Um, the history of derivatives is actually kind of helpful to understand. So the first derivative contract was a corn future in Chicago, and these grain farmers were making all this grain, and they would like make too much of it, and so when they would go to the market, there'd be too much supply, the price would plummet. Or some years there was a drought and they wouldn't make enough, and so the prices would be crazy high. And so these farmers didn't have a way of like keeping their costs stable and their revenues stable for their costs. So their revenues and their profits were super volatile. So they came up with this basically forward contract, futures contract, to say, okay, you're a grain farmer, you can lock in a price for your grain that you can sell in 6 months' time. And then, the buyer would come in, also know like they have corn as their input, or grain as their input, so they would buy, and they both know, okay, we have this fixed price that we can sell for this season. And all these contracts were happening, and then eventually they decided to standardize them, and that way, you could do, they're basically more fungible, so you could do tens, thousands, hundreds of grain contracts, you could do one. And then what happened was the clearinghouse had to come in because people would default, right? They'd say, well, you promised me this amount of grain, you didn't deliver it, now what? So that's where the clearinghouse came. So that's kind of a bit of history. In the crypto world, the way we got started actually was helping Bitcoin miners. So in the same way a farmer would make grain, a Bitcoin miner makes Bitcoin. And they would make, however many Bitcoins they're mining a month, but the variable costs or the variable things are like the difficulty rating. So they don't know how many other Bitcoin miners are on the network at one time. They didn't know what the difficulty rating was going to be, and so they didn't know the price of Bitcoin, but their costs, they know how much electricity they're spending, what their lease is, and so we gave them this contract, which is really like an early smart contract. We built it on Bitcoin using multisig, where the miners could lock in a price that they would sell Bitcoin in, say, like 6 months. And then we had market makers and private funds on the other side buying that. So that's kind of, I'd say, like one of the early uses of crypto derivatives. That's the initial use case was like hedging. That's why we called the company Hedgy.
That's so interesting. I mean, that's just like the corn futures.
Yeah.
Like it's just starting. That's crazy.
Yeah.
So did Hedgy expand past, I guess, that like original corn future Bitcoin mining like contract?
Yeah. So we built the tech initially we built on Bitcoin, and then Ethereum comes out, and we had, I was in the Ethereum ICO. We'd been playing with the Ethereum contracts, and we realized that this was a fully expressive programming language that we could like build almost whatever we want. So we eventually built it on Ethereum, and then we were expanding into ETH contracts as well. But everything on our platform was OTC, so people could come up and make their own contracts. They could find their own counterparties, etc. We never got into options, although that was eventually probably going to on the roadmap. We knew that was coming. What else? Yeah, so essentially now, if you look at like the whole crypto landscape, you have everything under the sun. So you have crypto options, puts and calls, you have futures, you have perpetuals, you have people do OTC, their own kind of customized derivatives, although less so. And now it's getting weirder even too. I mean, you're going to see, I think, eventually you'll be able to do like mortgage-backed securities on Metaverse real estate. As crazy as that is to say out loud. but that's going to come eventually.
Well, you've already seen the first Metaverse REIT that came. They've been working on it for, I guess it's been over a year now. But I think that might be a good way for us to transition into the intersection of blockchain and real estate. Can you tell us a little bit about your experience at Pareto Properties? Really, I guess, like, thematically, what drew you to real estate in the beginning? Because I think that you studied real estate finance in college and then again in law school for real estate and securities law. So, like, obviously you had this other interest that was real estate, and then you sort of stumbled into crypto and you saw, like, unlimited upside there. And then how do those two converge for you, do you think, in the future?
Yeah, I mean, I think as an investor, I think at least my strategy has been to take a barbell method. So what I mean by barbell is you have one side that's high risk, another side that's less risky, and together, they kind of balance each other out. So for me, real estate, especially when I was in college, I did a lot of reading on people that I thought were interesting, and a lot of them were, real estate investors. Um, and real estate's, for whatever reason, just one of the best savings vehicles, um, that over time has led to a lot of wealth creation. It's been able to last, through every different cycle. If you look at the makeup of the S&P 500, that those companies have completely turned over. I don't know what the stat is, but um, a number of them, many are not around today. So obviously, an index fund is great because you get to um, just invest in the index. But real estate, in a way, is another, like, Lindy, I'd say, asset where it's not as volatile. So for me, diversifying capital gains into real estate was always a big priority. So in terms of marrying the two, I mean, that's kind of how I think of it. You have cash flow, I have cash flow real estate on one side, and then I have, more risky, I'd say, on the technology bets, on the other side. I took capital gains in 2018 and put them into real estate. Um, and then have been kind of running that portfolio construction since.
So I
But
understand the premise of kind of, the decoupled asset classes of the two systems, and, like, obviously a lot of the promise of real estate. I'm curious, though, if you do have ideas in which, the idea of, like, blockchains will become integrated into the way real estate is owned, transacted, etc., and not in the metaverse real estate quite yet, just
sure,
real
sure.
physical real estate. Exactly, you
Yeah.
further. So
So I looked into blockchain real estate pretty deeply in 2018, 2019. And the issue was, so there's a bunch of these companies that got started. It was like, all right, we're putting title on a blockchain. We're putting all your deed history so that you can just we can just transfer title to a property, um, by a click of a transaction. And the tech is there and the tech works. But the problem that everyone kind of realized is that real estate isn't about a database entry. There's so many intangible things that go to making clear title and to making a real estate transaction. There's an escrow company, there's tenants, there's a lien holder. And so all these parties have to kind of come together, and then, oh shit, you didn't realize that there's an encroachment on your property. And that encroachment means someone's going to put a lien on it. So a blockchain can't know all that. And so it kind of, I'd say, falls apart pretty quickly, at least putting real estate on a blockchain, unless you kind of, like, just use it for title, just like a provenance record of who owned what when, which already that alone would be very useful. I mean, there's so many examples around the world of countries with bad title provenance, which is, in my opinion, what makes, I'd say, America pretty amazing for real estate investing, because you don't even have to think about it. It's like, you have a court system. If anything goes wrong, you have history in title records. You have, you can get debt on properties. So in other countries, it's a lot more difficult. But, kind of bringing it home, I never was convinced that, you know, real estate on a blockchain would be that big. Now, as a flip side, though, metaverse real estate is very interesting because it takes all those issues of, there's an encroachment, there's, tenants, and everything about the metaverse real estate is digital. So, if you want to foreclose, someone doesn't make their debt payment, that's all on chain. You just take the property back. If you want to do a lease, you can also program that into a smart contract. Every aspect of it is a smart contract. The title provenance is all on chain. It's almost like it's just like an NFT essentially. The question, though, in my mind right now, at least with metaverse real estate, is where does value accrue? So if you look at like traditional real estate, or why real estate has value today, if it's residential, it has value because it's livable. So you're providing housing as a service for someone, and it's in a decent location. Something in a city center is going to rent for a higher price per foot than something in a suburb because you have access, there's more demand for it. But in the metaverse, and same with like retail, right? Why is retail space in downtown New York, on Fifth going to be more expensive than in the suburb? So the problem, though, with the metaverse is there is no physical constraint, right? There is no downtown yet. We're just building it. And so the way I'm thinking about it, at least, is going to be priced in like eyeballs and traffic. In the same way, if you could think about it, like we already have digital real estate, we just don't think about it like this, which is, let's say, Google AdWords.
Search engine results.
Yeah, search engine results, like the first page of Google, or even like when your little AdWords come up, or Facebook ads, like you're paying to get physical space on someone's screen for a price per 1,000 impressions or whatever it is. And if you don't pay, then you get booted, right? The next person comes in. It's like you could even think about it like there's millions or hundreds of millions of real estate transactions a second for those digital ad spaces, but we don't think about it like that, right? Because we think of it like digital. So
you could almost like stream the payments in real time from the eyes to the wallet of the person that owns that real estate or holds that ad space. It's sort of like Times Square, but instead everything is perfect in the
yes.
in the counting or the understanding of like who sees what and when.
Yeah.
And like the value of those players even is like, or not players necessarily, but the value of the eyes could be different by the player or ever how you track it. It'd be completely perfect. Right, exactly.
Actually, yeah, that's a really fascinating idea. I hadn't quite thought of fully. So to expand on your idea, then you could even have pricing for on someone's wallet profile. So if someone had like a bunch of expensive NFTs, you could charge the landowner, the advertiser, more for when those eyeballs come, and then you'd have like basically a printout at the end of the week or end of the month showing, okay, you had this many people with this net worth view, you had this many people in total, this is what your lease payment is, or this is what your payment was for that, and it's fully variable.
And that's why, like, what you're talking about is true, is where's the value accrue? Because like you can just teleport anywhere into Decentraland, let's say. Like you could just go anywhere. So you could have a plot in the very corner of the world and teleport to the city center. And so location is less important. And yeah, that's really interesting. I haven't thought about how to think about where value accrues in the metaverse.
Yeah. So that's kind of in the same way, like going back to 2013, 2014, we didn't know where exactly crypto value would accrue. Like there was this blog post from Union Square Ventures called the Fat Protocol Thesis, which was that the layer ones would accrue a lot of the value and not the app layer. Whereas in the internet, the app layer, like Facebook and whatnot, accrued the value, and the TCP/IP protocol layers didn't accrue anything, or Linux, right? But that, and that thesis has kind of been seesawing, I'd say. Like for a while, people were like layer ones are not accruing the value, it's in the apps, and now you're seeing like a layer one rotation trade almost, where layer ones, all these new layer ones. It's like, how many layer ones can there be? Well, there's Avalanche, there's Luna now. They're almost acting as like side chains for Ethereum in a sense. They're all just kind of, I kind of think of it as like one meta blockchain, all of it, right? In the same way you have like multiple websites that you have Gmail and Yahoo and Facebook and Twitter, right? They're all part of the internet. That's all kind of a multi-app world. It'd be kind of the same thing with blockchains. Crypto would be a multi-chain world. I forget yeah. So anyway, so we don't know exactly where the value in the metaverse real estate or in the metaverse will accrue. but it will. You almost have to take like a leap of faith that like, okay, there's novelty here, there's attention here, it will accrue somewhere. We just haven't figured that out yet. So it's
And
kind
it's also
of
very specific to, the metaverse you're in, right? If it's somewhere, and like if it's a
yeah
game, hypothetically, right? The way gameplay is dictated, if there is some central area in the game and you can own something in that area and people do travel on foot versus metaverse residential real estate, which is like, everyone has their arbitrary apartment or whatever, that's very different than if there is truly a common space that's part of the game that is viably owned.
yeah. So that's one exactly. That's one way to think of it. Like the games will garner attention, and then therefore each game will have its own value accrual mechanism within that game. I think where it gets interesting though is like, can you take your assets cross game? Can you take your avatar, from one metaverse to another? Can you battle with it? Can you play for real stakes? And that's what this open. I think that's. Go ahead.
But you can't take your real estate. You can't take the room in Decentraland and move it into the metaverse like Facebook's.
Yes.
But you can take your sunglasses that you buy or the coin from Lady Gaga that you have and show it to everybody and wherever you are, right? Like that's what the interoperability is. But maybe that is one of the reasons why real estate has value accrual in the metaverse is because you can't transfer it from one to the other.
Yeah, that's possible. And that's why I keep coming back to just like it's going to be attention and eyeballs. That seems to be, how the web is valued. If you think about it, like what's the most valuable websites? Facebook, Twitter, Google. They're monetizing eyeballs and traffic. So it's not a far extension to think that the Web3 or the metaverse version of that is the same. But then do you have like other interesting, like, the social graph, for example. The social graph in Web 2 is basically your friends, so your social network, who follows you, who you follow, all your posts and history. But it's just data, right? So that's limited. The Web 3 social graph is very interesting because now you have everything I just described in Web 2, but you have NFTs, you have actual assets, you have rights to vote in DAOs, which is like super valuable. So now you have voting contracts, you have all the history, you have addresses that you've sent money to, addresses that you've that are friends that you approve, and so now you can build a credit score on top of that. You could start to airdrops, I think, for example, are an amazing invention that doesn't get talked about a lot. It's like,
it's going to change the world.
Yeah, we take it for granted. We're like, oh yeah, we can send money to 100,000 people that we don't know, but we verified that they are someone's operating that address. They've provided value to our product by providing liquidity to us or making a transaction, and like now we can just airdrop them a token, and now they're owners in our app. Like that concept is like just not possible.
I want to run this idea by you too, because this is something that I think about a lot, and it's the principal agent problem. And I think that it comes from my finance and accounting background in school, and like how all of these systems for finance and accounting are basically built to limit or to hedge the principal agent problem or the risks that are associated between principals and agents. And one of the main things that I think is interesting about crypto is like the threshold for interacting with it, the gates to be a part of any given protocol is to be a principal. And so the principal agent problem is eliminated. I mean, I don't know how else you look at it. And that effect on the world isn't priced in, I don't think. Like, I don't think that the incentive structure, like the way that the incentive structures are being changed by airdropping tokens to people, and like all of a sudden Lewis is an ENS evangelist to whoever will listen to him. And everybody who's interacting with that protocol has the incentives of the team that's actually building it and developing it. And so what do you think about that idea?
Yeah, it's a good way to frame it. I hadn't thought about the principal and agent problem in that context, but basically what you're saying is you're disintermediating the agent. which is absolutely right. The whole point of blockchain crypto is disintermediating the middleman, making everything more peer to peer, and yeah, essentially you are a principal in a network now. You can
There's
vote.
no way to be on the team without some ownership.
Absolutely.
You're not on the, you have both or neither.
Yeah, exactly. So, and I think that's what people miss a little bit as well is, before you had, just with websites, you could read what people posted. Then, Facebook comes along and now you can post to the website. And I'd say like now we're in the third wave, which is you can read, you can post, and you can own. And so that's, we're just scratching the surface of what you can do with ownership. And I think, especially in DeFi and crypto networks, it's an early sign of how prolific these communities become. I mean, think of the term community, like Facebook never had that community. Like there were early web communities like with Reddit, Redditors or Yelpers. Why did people post Yelp reviews? It's because they felt like this sense of connection. They were bought into making the product better. They wanted to get like they had not ownership, but like a belonging in a sense.
It's like Wikipedia is the perfect example. Like no one gets paid for that, and yet you have to cross all these barriers basically to be like a person who is officially editing Wikipedia documents, and they get nothing.
Yeah, exactly. And so it's like, but they got a sense of belonging. They got a sense of, pride actually is probably a big human emotion part of it, is like they're Wikipedia maintainers. They're helping create the internet's archive, the internet's information, which is cool. But they didn't get anything for that, right? So now imagine if Wikipedia, if Wikipedia is listening, they should do this. They should go back and they should look at every account that's edited a post on Wikipedia or created a post, and they should, obviously, if they want to do a token, they could airdrop them a token for Wikipedia DAO, and based on like commits and whatnot. And now they would just make their community owners overnight.
Well, Tim Ferriss,
and probably pretty rich too. Yeah, and they probably solved the.
Ago, so,
what's that?
I said Tim Ferriss had Jimmy Wales on, like in the last 2 or 3 months, because I remember listening to it when I road tripped, and it was a recent episode. So definitely putting Tim's into Web3 now. So there's a way.
That's right. He'd be a good guy to spearhead this. Yeah. So yeah. I mean, that's where I think that's what's so exciting is like that. All those new concepts of what can you do with an evangelized community. That's also an owner. We're just scratching the surface there.
A friend group with a balance sheet. What can they do? I want to have a DAO by like the New York Yankees or something insane. I can't believe Ken Griffin front ran the Constitution DAO. That's so sad.
Yeah, but
what a prick that guy is. He's a genius though.
Yeah, look, there'll be more, and I think like the press alone from that is great because now people will see what's possible.
Have you seen the run up in the price of people?
The token's memed anyway.
Yes. Yes.
I think China might have bought that up, and somebody might be playing with the people coin, making it not so United States, but we'll see.
Yeah.
If they would have waited a few days and then sold all the people, they could have definitely outran Ken Griffin. They paid $200 million for it.
We're learning from round
right.
Exactly. I want to go back to something we were talking a minute ago. You wrote a blog post in 2015 called like the $1 trillion vending machine. We were just talking about, this is a 2-part question. We were just talking about, valuing L1s, valuing protocols and like protocol valuation and how that's difficult. So first question is, what were you writing that kind of with, to what extent were you taking yourself seriously writing $1 trillion valuation for Bitcoin in 2015, and how surprised were you when that was realized, in the past 12 to 18 months or whenever we crossed that line? And then 2, just what's your framework generally for valuing L1s? Solana, how do you justify a $68 billion market cap for something like Solana? Arbitrum having like Avalanche having like a $30 billion valuation.
Yeah, so you're taking me back here. So yeah, that was so in 2015, the term smart contract wasn't a thing. I remember reading the term smart contract in the Ethereum white paper, and actually in there they use the example of a hedging contract. But in all the investor conversations that I was having, like I'd first have to ask them, do you know what Bitcoin is? And then if the answer was yes, then I could tell them about smart contracts. And then if I had to explain smart contract, it was like people were like, what the hell is a smart contract? So the vending machine analogy, I think it was Nick Szabo's original analogy, but it's very helpful. So, a vending machine is an automated computer that does a function based on an input. You put money in, and it spits out a whatever an item based on the letter. There's no intermediary, right? There's no person between. So that was kind of the analogy that was apt to use a smart contract. Now it's like okay, we get it. Like we know what a smart contract is now, or at least most. I think are starting to understand it better. In terms of when I was writing that, I definitely was thinking, if you look at the derivatives market, if you look at the equities market, already those are in the trillions. So the thought back then was, if this can, all derivatives, in my opinion, should be on a blockchain. I think they will be eventually, especially with central bank digital currencies coming. Banks will be able to offer these, it'll power the back end. And the same with equities as well. They're already digital. It'll power the back end of those. So it was clear to me that anything with money would eventually be put onto blockchain architecture. That's separate though. So whether like Solana and Ethereum and all these things justify their market caps, that's a separate question. So if you look at the charts, we have cycles. We've had cycles since the very beginning of crypto. We have cycles in almost every major asset class that there is. So I think we're probably closer to the top of this cycle than the bottom. But then again, it's like we are starting. These networks are starting to power real use cases and real money. So if Ethereum becomes a settlement layer for actual real smart contracts, so like Compound, let's say, or Aave, they're doing billions of dollars of lending volume. That's valuable. So what is the layer one that app trades on worth? Should it be worth more than the app that's on it? Probably, right? Because it's securing it. And then you take that same idea and you look at Solana. So in my opinion, like these are all networks that it's like if you take the whole pie of use cases, each blockchain in layer one is kind of like carving out a section of it. So yeah, I think it's at some level that they deserve the valuations. At these valuations, hard to say. I think technology loves to get ahead of itself, but that's also kind of the push and the pull of technology. Like we need the massive run-ups, we need the bubbles actually to create the excitement, to get awareness. Like I just saw Budweiser made their name like beer.eth on Twitter yesterday, and it's like, that only happens when there's like people are talking about it. That means people at the company, like employees at the company, are talking about it. They're going to their higher ups being like, we need to do this. Like look at Visa, right? They bought a punk because people at Visa were talking about it. So you need to get in the zeitgeist, and the way to get in the zeitgeist of culture is to have unfortunately these bubbles, and the technology waves are no different. So if you look at the long-term trend, it's good. We're actually finally getting adoption. We're finally, having some really interesting use cases. We have a lot of smart people coming into the space. So whether all these layer ones will exist in 5 years, probably not. But I think more than just Ethereum and Bitcoin.
I think that's a good measured take. We'll transition now to just some more rapid fire questions. There's no rule saying crypto and investing can't come back up, but there are a few other things we want to ask about. I saw on your LinkedIn that you've been involved in Wi-Fi Tribe, which is kind of an organization that a lot of people who have read the 4 Hour Workweek end up finding on the internet and kind of like fantasizing about joining. But what's been your experience with Wi-Fi Tribe? Can you quickly introduce it and kind of summarize all that?
So Wi-Fi Tribe was started by a friend of mine named Diego. They basically were early to this remote work movement where, what if you could, obviously if you work remote, it kind of gets lonely, and but you also want to travel. So what if you could just bring a bunch of people together that are all working remote, get a house for a month, let's say, in a a foreign country with good Wi-Fi, and just kind of like co-work and co-live. And that was the initial idea for it. I did the first one I did was in Nicaragua in 2016, and it was about maybe 20 people, 15, 20 people in a house. So most people work during the week, and then you go and do activities in the evenings and the weekends. But now, especially, I think it's even more relevant with COVID. It kind of like blew the door open on remote work, and all the tools were there. But with COVID, it really just like it kind of made it moot, the whole point. It's like, can I work remote? It's like, well, yeah, we're all remote now, so that means we do it. All these companies were forced to digitize or go remote almost overnight, and now it's kind of like the cat's out of the bag. So companies like Wi-Fi Tribe have really benefited. And I think they'll continue to benefit going forward because, there's if you follow Balaji on Twitter, he has a good thread on basically like why time zones matter more in a remote world than actually geography. And it's so true. Like, I'm hiring some web developers now from online, like in Mexico and South America, and it's so and I was also interviewing some from Ukraine, and it's like I can have quick communication if they're in my time zone, but the people in Ukraine are going to sleep, halfway through my workday. So it's like it's true. Time zones matter. So I think we'll see like the remote work trend continue in big ways. And now with Starlink, I don't know if you guys follow like what's happening with Starlink, but I'm the nerd in me is like super geeked out. I have a few of them ordered, and my dream would be to have a Starlink and just like put it on a van or put it on
a boat.
Yeah, put it on a boat.
Maybe in the middle of the ocean.
In the middle of the ocean, yeah, and take Zoom calls from.
It was funny. This last week, my girlfriend's family was in town, and like her like grandmother and great aunt and stuff like that. And her great aunt was complaining about the Wi-Fi in her rural house in North Carolina. And I was like, "You haven't heard of Starlink? Like, what do you mean?" And it's like, Bitcoin solves this, And so I pulled it up and showed it to her. She's like, "Wow, I'm gonna order this right now." Yeah. Hopefully, it funds the mission to Mars, right?
Hopefully, yeah. I mean, that piece of SpaceX alone is probably worth like 50 billion at least, maybe even 75. So I mean, think about like you're just intermediating the telecom companies. Right now, you have global internet service, broadband speed, cell phones, computers, whatever, Internet of Things. So
a lot of industries hate Elon Musk. A lot of bureaucratic giants are going to get displaced because of him.
Yeah.
Matt, what are your smartest friends doing at night and on the weekends now?
Good question. Probably at the intersection of DAOs, NFTs, DeFi still, crypto, a bit in, I'd say for sure, my circle is obviously biased and skewed towards crypto. But the intersection of those things, I'd say, crypto social, like social tokens, experimenting with like different DAO governance structures, building new DeFi primitives. I'd say we still are in early innings of all that. And then we haven't even got to like what happens when you can borrow against an NFT, or you can, lend out an NFT for access to a DAO. All those kinds of use cases are coming.
Not just lending an NFT for DAO access, but for like IRL access, right? Like if you want to, when I was in New York City, I was there not related to the NFT stuff, but then it was the same time. And it's like, if I just had a friend with an ape, which I'm sure I do, if I could just borrow that for the evening, right, without like getting their wallet, that would be sick, because there were some parties I could have gone to.
And so take that same use case, right? Now you could do like a week-long loan or a week-long rent payment to borrow that NFT, and now your NFTs you can monetize them.
It's like Turo.
And now they have a cash flow that
If
you
on a Turo
can
for your
underwrite,
cars. Yeah.
and then you can get debt on them. And that
Exactly.
the debt that you're talking about, that that's one of seriously what I'm really interested in is like with real estate, and why I think that it's so interesting is because once you can tokenize real estate that's producing a cash flow, your lending opportunities are like limitless effectively, and you could put it into a smart contract escrow between the lender and the borrower, and then have the smart contract of the token change to where the debt payment is paid automatically, and then like upon non-payment, the debt would be I guess there couldn't be non-payment, but if you weren't to do the last part, upon non-payment, it would just get liquidated or moved to the lender's wallet, right? And so like it creates this perfect marketplace. I guess the only problem really is like valuation and how you value it moving forward. But yeah, I totally see your vision there. I think it's super interesting in the future.
Yeah, I mean, even just like, for example, I'm going through refinancing my house right now, and like the lenders want all the information, income, whatnot, but they don't really value assets. They don't really value, but if there was a way to put like crypto as collateral in a smart contract that the bank could then foreclose on in an instant, that would be, that'd be great. I think it'd be great for the bank, it'd be great for me. It would unlock, a lot of lending opportunities in crypto, and bridge those two worlds. But it's early days, and that's why like anything that touches the analog world, like the traditional banking world, it's just so much harder, so much slower. Like all the innovation, all the smartest people are just trailblazing in crypto, in the open protocol world, for good reason, right? Like look at the valuation of the open protocols versus closed. I mean, people don't even remember like the closed protocols. Like there were companies doing like private blockchains. And do you guys know what private blockchains are? Have you come across them?
I'm familiar, yeah.
This was like all the rage in 2015 to 17. It was like IBM and all these companies were going to do like blockchains as a service. And everyone was like, I love blockchain, not Bitcoin.
Yep.
This was a big talking point. And then obviously when the next bubble happened, 2017, 2018, they quickly shifted back. But now I'm sure there'll be some hybrid of it. Central bank digital currencies will be a quasi private, blockchain where they'll have, white labeled people that can interact with it. Maybe your bank will allow like Ethereum deposits in or Bitcoin stablecoin deposits in, and then you'll be able to send your central bank as digital currency as money. So that's like, banks may end up being like one of the hubs to convert between the open and closed world.
Are you concerned about central bank digital currencies?
Actually, no. I mean, the stablecoin regulation, I think, is coming, especially for the big open ones. But overall, I see the central bank digital currencies actually as being very positive sum. In the
That's
same
a hot
way,
take.
yeah. Well, I guess look at okay. This is how I think about it. For example, look at people forget that there was intranets and internets in the 90s. And there was CompuServe, Microsoft was doing one, and they thought, we could control everything. We could keep it in the AOL world, we could keep it in, our own private networks, and we can control who goes on. But like the market won, and the market usually always wins, unless there's some monopolistic like behavior going on where they can keep, the inferior product out. But the market will win, and I think the market's shown through history that open protocols win. So while yes, central bank digital currencies, I think will exist, they will have to play with the open protocol network. And actually, if you think about it, like they already do. Like you have dollars in a bank account. That's a central bank digital currency without a blockchain. You can convert that to Ethereum or stablecoin and then send on an open protocol through Coinbase. So like the whole from a user perspective, it's not that different than it already is. It's just on the back end, you'll be able to maybe program smart contracts between, central bank dollars and a white labeled, let's say, compound contract or something like that. You'll be able to send your KYC dollars to a special Bank of America compound money market fund, or that all the banks use. Like that whole side of like the marriage between the central world and the decentralized world is completely untapped right now. So I think that's where it's positive sum. And look, it's also going to get regulated. So there's no way around that. And in the same way the internet was regulated, at one point encryption was illegal. It was like fully illegal, and then they had to like unwind that. And now obviously it's not. But e-commerce, sorry, I'm kind of rambling here, but they're all relevant parallels. So e-commerce didn't take off actually until because you couldn't do encryption. It was illegal, so people had to do like plain text credit cards, and people were getting credit card fraud, identity theft. This was like people thought the internet was for pornography and for identity theft and credit card fraud. And it wasn't until they could, when they made encryption legal again, that you could do encrypted credit cards, and then e-commerce started taking off. So in the same way, like I think we're in that phase now between like openness, people are getting hacked, blah, 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 blah. We have a long way to go there, but eventually the market will figure out a solution that marries the two and it's positive sum.
Yeah. I want to save this for my next question because this is a question I want to ask more. But I think that, we can make the argument that like zero knowledge technology might be like one of the next big infrastructure pieces that brings another big wave of like app pieces. But yes. I want to ask one other question, and then if you want to refund that, though, go for it. I have a lot of curiosity about an analog Web 2 existing community, another one that you're involved in, Summit Series. What's been the involvement in that like? What's been that experience? Kyle and I have mentioned the third door, maybe one out of every 20 episodes, maybe one out of every 10. Big fans of Alex, big fans of the book, recommended it widely. So what's your experience been involved in kind of that world?
Sure, yeah. Summit's a really cool organization. I've been involved, I'd say, since 2018. For those who don't know, it's basically a community of like-minded entrepreneurs, investors, artists, change makers that kind of come together and it's like a community that's it's business but not formal. So you're meeting other founders and investors on a chairlift on Powder Mountain, or you're having like an unconference type talk where people are sharing ideas. So that's been my involvement. Really cool organization. They have a few. I think they're going to do some at sea again in the coming year. And obviously with COVID, it was a bit tough for them because they couldn't do in-person events. But now that's coming back.
Yeah, it's a really cool organization. I'd love to be a part of it one day. What brings you energy? Like, what do you enjoy doing? I know you travel a lot and you're sort of popping all over around the world. Are you more of are you a surfer? Is there something that you really love to do, or are you just a think boy? You love to think?
No, I'm not only thinking. For me, I kite surf, which is
cool.
A big passion that's kind of evolved.
I knew there was something there.
over a handful of years now. It was actually very kite surfing is great because it's kind of marries getting outside, but also you have to be in flow state. I'd say it really cultivates flow state to do it well because you're harnessing the elements. You're also like managing a million things with the kite and the board, and so it's kind of almost like an active meditation. Is one way to think of it, and it was incredibly humbling. It was not easy for me to learn. It took me a number of years, and I was very arrogant going in. I snowboard, I wakeboard, I can pick this up fast. And when it was difficult, it was a very healthy, humbling experience. So that's I'd say that that's one thing I do for fun. In terms of what gets me excited now, or what gives me energy. I was thinking about this. I've been thinking about this question actually a lot over a number of years. But for me, I think being a catalyst for change, like helping predict the future for whatever reason, is really fun for me. That's what kind of drove me to technology. That's what drives me to crypto because it was kind of the frontier within the technology world, in my opinion, back in 2013, 2014. Helping invent the future, helping push humanity forward. I think technology is the best way to do that, and then leave, I guess, in a way that it kind of would translate to legacy in some way, and impact. So for me, what's the biggest catapult, thing I can use as leverage on my time, and I kind of view technology and crypto as that right now. I look back at a lot of like the internet pioneers, the web pioneers, and how they maybe made an impact. I think we're at that similar stage now.
Yeah, it seems like you're a student of history as well. How do you, or how have you done that over time? You just read a lot of books, and are you purposeful about trying to pick up the past in order to influence the present?
Yeah, for sure. I mean, reading. I do read a lot. I love reading. I think it's especially bringing it full circle. Whether back to college and whatnot. I think half my education was from, over half, 80% was from real world experience and books. And school was maybe like 20, 25%. So yeah, so reading a lot, biographies are really helpful. Just studying patterns of people is useful. Like, one thing I looked at a lot is, for building a successful company, you really are, almost in this like gray area of building what people are doubting. It's almost like the more people doubt it, the more they're like that won't work or they don't understand. That's almost like you're almost in the right area. And then also like figuring out, looking at the history of the web, looking at the history of the internet, to try to figure out where it's going. Looking at the history of even like telephones and electricity that rollout. There was like just crazy articles actually from certainly in the internet days where people were like, the internet will never work. There's a great article actually, I recommend checking out, called "Why the Internet Won't Be Nirvana," and this guy wrote it in like 1995, saying how the web's stupid. Like, why would I buy music online when there's a full showcase of CDs and DVDs like down the street at my local mall? Why would I, read something online when I can, have my newspapers delivered? Like, really crazy, things he was saying that like you look back on and you're just like, this is so cringeworthy. So it's helpful for me to like read that and be like, okay, like the human brain doesn't like change. The human brain gets morphed into a way of thinking, especially at a young age, and then it's not easy to change after that. So trying to like remind myself of that and think, basically remind yourself like you don't know anything and that there's always more to learn. To question your assumptions. That's helpful, very helpful, and kind of trying to predict the future.
Yeah, think about that kind of in terms of like archetypes. So we were talking about, Wikipedia earlier and Yelp, and like, why do some people do that with, quote, no reward? And I think that's because always throughout history, there's just, maybe let's call them 1 in 20 people who have that like historian archetype. And it's just like this intrinsic drive to document. And like that is like the thing. Then there's like the technology type person, right? Who's just like the optimist, the push things forward, this is cool and we don't have it yet, but I think it's cool and I see a benefit. And like you have no attachment to the status quo and you're like let's just push things forward. And then there's the third type, which is like the Luddite, who's things are perfect as they are, let's not allow new things to adopt. And those are just like archetypes, just like, some people just aren't morning people and everyone has their different chronotype. It's kind of a resistance to change type personality trait that's arguably fixed. Then the internet's just kind of changed communication to where certain things bubble to the top, and everything's like hyper amplified.
Yeah, I think it's very rare to meet a technologist that's pessimistic. Because it's hard to be, like, you can't hold,
especially investors too, right? Because who's going to allocate their capital, right?
Yeah.
Like, why would I put this at risk if I don't think it's going to work? You just have to have some degree of crazy optimism.
Yeah, and I think another way to think about optimism is like human ingenuity. Humans are smart. Like as a collective species, like we're gonna figure it out. If there's a will to like build a blockchain-based economy and network and a metaverse, like people are gonna figure it out. And that's, I think, one of the biggest, I'd say, lessons is it's like don't doubt human ingenuity, basically. Like this, the signal of like a lot of smart people working on something is not something to fade, and that's been very helpful. So I think that you're seeing that with Web3 right now. Like look at Jack Dorsey, right? He just stepped down from Twitter. I guess we don't know for sure, but probably going to be working on Web3 and crypto stuff. Mark
And
Zuckerberg,
Bitcoin.
and Bitcoin. I think he'll eventually come around.
We'll see.
Yeah,
Twitter came around yesterday.
Because
They added ETH payments.
Yep.
yeah. Oh wow, that's fast. And I mean, yeah,
Instant, someone would say.
yeah. And I was, with Zuckerberg pivoting to Meta, like they see it. So,
Well, one question I'd like to sign off with crypto investors and enthusiasts is the not financial advice section of the podcast. What are a specific subgroup of smart people working on some moonshot bets, some moonshot 10x projects people should look at just for fun? And not
People
looking
shouldn't
in.
look at them,
Just look at it. Just with your
yeah,
eyes, not
just
with your wallet.
evaluate with no
What's some
financial
kind of
advice.
under the radar projects you think are worth exploring? If you want to make
yeah, I mean,
less turn into more with
For
high risk.
utility's sake.
yeah, I mean, I can't give any obviously financial advice.
Projects worth looking at.
But yeah, areas. I mean, anything that's okay. Let's see. I mean, one portfolio company I can talk about that's pretty interesting is FutureSwap. They built a basically futures-based AMM, and they're building on top of Uniswap now. So that's a pretty cool one to check out. Really smart team, doing some really interesting things at the intersection of AMMs and derivatives.
That is a problem.
Amazing.
I'd say without being specific, I'd say like the Cosmos ecosystem is very interesting right now. I think what I like a lot about Cosmos is the everything is its own app chain. So if you're building a social media protocol on Cosmos, you're also the layer one, and so you can build your layer one to the specifics of what you need. So you can build it for scaling, you can build it for finality, you can have extra features. And then now they launched the hub, so now all Cosmos chains can interact with each other as almost like one meta layer. So that's pretty exciting. I think a lot of DeFi stuff on there is pretty cool.
Well, Matt, this has been a really, really fun episode. Thank you so much for coming on. Where should people, if they want to follow you on Twitter, read your blog, anything like that, what are the places to direct their attention?
Yeah, they can go to my Twitter. It's just at Matt Slater, or my website, mattslater.co. And the fun website is stateless.vc. Yeah, DMs feel free to shoot me a DM. This has been super fun, guys. Enjoyed it.
Thanks so much.
Thanks, Matt. And that wraps up our conversation with Matt Slater. Really forward-thinking person, obviously, who has proved that over and over again. And I think he's made some really interesting moves over the last 10 years. So he's going to continue to do that in the future. And yeah. So my 3 takeaways. Number 1 is that you have to look at ideas through the lens of value accrual. Like, it's not enough for an idea to just be really good. You have to understand like how it's going to make money and where in the process like value will accrue to, so that you don't waste your time building products and services that should exist, but when they do exist won't make money. And so I thought that was really interesting. And I'm not sure where like I gleaned that from the podcast, but I definitely have been thinking about it since then. Number 2, pay attention to what your smartest friends are doing and don't look away. Figure out what it is and why they're interested in it, because I think that's where like a lot of value accrues in your social networks. He said for him, his smartest friends are doing things like social tokens, metaverse real estate, yield farming, and the like. I think there's a couple more maybe that I'm missing. And then number 3 is Oh, okay. Yeah. So I really thought the conversation was interesting about metaverse real estate and how you have to value it differently than normal real estate because of the zero cost of transportation within the metaverse. And I think that problem being solved for will unlock like a lot of value. Like right now, there's a lot of speculation going on in these digital worlds and like the Decentraland and Sandbox and all these things. People are paying millions of dollars for parcels of real estate, and I don't know. I don't think the demand, like I just don't think all the tools are built yet. It's really early, and somebody's going to figure out how to make those plots of land really valuable. But they're going to have a really good question for why is this valuable in the face of no cost transportation?
Nice takeaways. 3 from me, jumping right in. First one is being in the same industry for a really, really long time, kind of the interesting advantages that come from that. So, I feel like I've been in crypto a long time. Obviously, I haven't, right? Like not before this podcast, which only started 18 months ago. And even then, I feel like we started discussing crypto like 9 months in. So like really under a year. I still feel like it's been a long time. Compare that to someone like Matt, who is literally approaching the decade mark for his involvement in crypto. I'm asking questions about like, how did this, prediction you made in 2015 kind of play out? And those are like just being asking those questions like immediately just gives him so much credibility to answer them, because it's like you've been around for 80% of the lifetime of this space, and like as long as he doesn't leave, that number only goes up. Because he only like came out in 2009 is when like the concepts were born. So he's like been around everything, and that gives him a lot of perspective, like for some of the things you're discussing, Kyle, to speak really candidly about what will and won't make it. Because like he's like in bull markets, you don't have to actually do anything valuable and your things just blow up. But like to make it through the cycles that he's seen, eventually you have to actually have a good idea. Otherwise, the ideas are not going to make it. Second one is the idea of the serendipity or synchronicities, or whatever you want to say, that kind of came from living in San Francisco when he graduated. Obviously, we didn't ask him about any of the counterfactual questions, but it kind of seems like he first discovered crypto in large part to living in San Francisco and being surrounded by the types of people who would be early to a phenomenon like this. So the kind of takeaway is like, are you putting yourself in situations where you're just going to randomly encounter things that have world-changing ideas, or are you just kind of hanging out in like not interesting places with not interesting people? So this is kind of making me not reevaluate, but look for opportunities to join additional communities or additional circumstances. And neither of those have to be in person. In person's awesome and potentially preferable, but not mandatory if that's not an option, where I'm more likely to encounter these types of interesting people, these interesting ideas, these kind of quote unquote smartest friends who do things on nights and weekends that end up being 10x investments. Third takeaway is the idea of, quote unquote, did you miss it, right? Matt thought he missed it. Kyle and I thought we missed it when we were interviewing DeFi Andy about Ethereum and DeFi in like March or January or February, whenever that was. This is in December of 2021 for context. Had we done that, right, and been like just decided to go all in, then it would have been unbelievable the types of returns we would have gotten in that ecosystem. Had we gotten into like Solana or anything back then, which we had thought we quote unquote missed, right? I mean, things are happening all the time. And as Matt put it at the end, or it might have been honestly off air, but focusing our time and energy on the frontier of the space is one kind of more interesting way to make it more likely that you haven't missed it. I would make the argument that this is, of course, not financial advice, but even the OG item in the space, Bitcoin, you haven't missed yet. There's still room to run there because, if it becomes the world's global reserve currency and things like that, which are looking somewhat probable, if not possible, then there's still lots of room to run. I mean, institutions haven't even hopped in yet. Anyway, rambling here. The frontier, you certainly haven't missed yet. That doesn't mean that, there won't be short-term cycles and long-term action. And, you should do your own research and actually learn about investing if you're curious about these things. But interesting things are going to continue to happen in the space. Money is going to continue to be made. Will it be as early as it was? It was easy as it was in 2013. I don't know, but there's still a lot that's going to happen. So optimism. That's all I have to say for this episode of the Lewis and Kyle Show, a podcast I hope you enjoyed as much as we enjoyed making. There's about 90 other episodes. I'd encourage you to listen to them. I'd also encourage you to shout out Kyle and I on social media. Shout out does not have to mean publicly shout us out. Just, hop in the DM, say, hey, give some feedback, suggest some guests, suggest some topics, start a conversation. We're all open to those things. Otherwise, we have a sponsor now, which I want to mention. They're called Espresso Displays. They're portable second monitors. They're thinner than an iPad. You can use them with your laptop. You can take it to a coffee shop. You can take it on an airplane. And it's really hard to travel with a monitor on an airplane and a laptop, but not if it's an espresso display. I took mine home. I took it on another trip. It's like slides into any pocket in my backpack. It's pretty awesome. They come in 13-inch and 15-inch varieties. And we have a link to check them out in the bio, in the show notes. I'd encourage you to do some digging there. That's all I have to say for this week. We'll be back probably in a week or so with another episode. See you then. Bye-bye.